what's going on, everybody? It is Wednesday, September 22nd, first day of fall. Taper, no taper, taper, no taper, taper. All right, we had the big Fed meeting conclusion today. And first of all, I just got to tell you, I really don't pay a lot of attention to these things. I know everybody's like freaking laser focused and, waiting for that 2 o'clock Eastern time and the statement and everything. I tried to tell you, like, in the big picture, these things are meaningless. Like monetary policy adjustments, they're really, in recent history, they're minor, tiny price adjustments, right? Because we're talking about incremental moves in interest rates, and the Fed is not even talking about changing the interest rate. I mean, we're talking about the taper. And, I've explained my view on asset purchases. I mean, they're asset swaps, and, these asset purchases are doing nothing to stimulate the economy. And actually, they're adding all these reserves to the banking system, yada, 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 because I've been talking about this for so long. So, full disclosure, I pay little attention to these meetings. All right, I try to give an outlook based on what I think the zombies are going to do. That's everybody who's like so freaking fixated with these things. And I said, I thought stocks would go down and the dollar would go up and gold would go down and commodities would go down. And we got some of that. I mean, the stock market was up for most of the day. It pulled back a little bit after the taper announcement. And I'm going to talk about what I think they're doing because... let me just finish. So the dollar popped up and gold went down, and these were minor moves. These were very, very minor moves. So when I read the statement, okay, it sounded to me like no taper because they said they're going to keep buying 120 billion a month, and when they see progress, then they'll start talking about reducing those monthly asset purchases. So it seemed to me when I read the statement that it was very ambiguous. When there's progress, if the progress continues, something like that, I think they said, then they're going to start talking about reducing those asset purchases. They didn't give a quantity or anything like that. But then I just kind of tuned out. I got to be honest. I didn't watch the Powell's press conference or anything like that. I just don't. First of all, I don't watch financial TV. I don't watch business shows. Absolutely not. I mean, those things are ridiculous. I was a contributor to Fox News and Fox Business for 10 years. I was on those panels. I quit because I couldn't take the idiocy that came out of those discussions. I just couldn't handle it, so I left. But anyway, it seemed like after the Fed statement, like a half an hour later or whatever, the whole thing kind of reversed. And then from what I read in terms of like comments on Twitter and stuff like that and what people were saying, it sounded like they're, preparing the markets for a taper in November. So for me, when I read the original statement, it seemed like no taper. They said when there's, if the progress continues, and that's, like I said, it's very ambiguous. But then from what I read in terms of the comments that are out there, and this is comments coming from, people in the financial business and on Wall Street, it seems like the Fed was prepping the markets for a taper beginning in November and running through, I think it was September 2022 or something like that. So there you have it. I mean, it's irrelevant. For me, the main thing right now is the fiscal flow situation. It always is. I've explained that. I explained it yesterday that we're coming down from a peak in March of 984 billion monthly. We're going to be around 600 billion monthly. So yeah, that's a big contraction from 984 billion, but 600 billion is enormous compared to pre-pandemic fiscal flow. Pre-pandemic fiscal flow. That means before the pandemic hit, before 2020, we were going at 420 billion a month. So we're still going to be 50% above that. So no risk to the economy. However, in the short term, because of the slowdown in the flows from the pace we saw in March, we're going to see a slowdown in the GDP growth rate. We might even see an uptick, a small uptick in the unemployment rate. Okay, so we're going to have to start watching the weekly unemployment claims number. Okay, that comes out tomorrow. And so I think, bottom line, today's stock market rally, I don't think it's going to hold up. I think we're going to see that fizzle away, and the market's going to continue to correct. And like I said yesterday in the video, the market tends to overshoot. All right? It overshoots on the upside, and it overshoots on the downside. And I think somebody posted a comment saying, like, how do we know when, the downside is finished? I mean, we're going to know when we're going to see sentiment indicators showing really high levels of bearish sentiment and really low levels of bullish sentiment, And unfortunately, even those things are not very precise indicators. Now, I will add this, and I think I said this yesterday too. We're still waiting on that $3.5 trillion infrastructure package. I mean, that's still being hammered out. I don't know if it's going to pass. I mean, there's total opposition to that in the Senate on the Republican side. We also have the debt ceiling that has to be lifted, and that would be a big positive. I've been talking about the debt ceiling and how that would help enormously in terms of what we're seeing with bank reserves and how that's been a constraint on bank lending. Look, by the way, I posted I put up my podcast today. You got to check it out because I've been talking about this, and one of the topics I address in the podcast, all right, and the link is right here in the description in this video. One of the topics I talk about in the podcast is the potential for an enormous credit expansion. Once we get this reserve situation sorted out with the banks, conditions are such, like we have never seen conditions like this before in terms of low debt burdens by households, very high government deficit, which is net transfers. I mean, I go through the whole thing. You really got to listen to it because it's a scenario. I think it's an extremely and a potentially explosive credit scenario in a good way, like in a boom. So we got that. So there's three things. We still have the infrastructure bill. They got to raise the debt ceiling, and if they do that, then I think it opens up the path to a major credit expansion, which could persist for a few years. All right, I mean, the conditions are just right. So check out the podcast. Go to the link below and check it out. You could find my podcast is on Spotify. You can find it on Google Podcasts. You can find it on Apple Podcasts. Just do Mike Norman MMT Podcast. If you Google Mike Norman MMT Podcast, you'll get it. All right, everybody. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT, and I help you make money in the financial markets. See you tomorrow. Bye.